have it. It's basic, but it's, you know, something that I do, and I think, you know, for those that want to learn structure, it's a great thing. All right. So let's take some time and do that. All right, so we'll kind of start over here because it's clean and I can use this portion over here. And I'm just gonna erase some of these lines so we can kind of start from scratch here. All right, everybody hear me okay? All right, so let me erase some of these lines just so we can kind of walk through the process. All right, I just want to kind of get a few of them. All right, I'm just going to push those out of the way. All right, so first thing I want to talk about is a pivot, just really quick so you guys understand. So a pivot, let's just look at an upside pivot, right? So you have a bar that price continues to move up, right? Price moves up, price moves up. And then where we identify a pivot is when we get a high bar, right? So in this case here, we got a high bar here. And then as long as we don't make any higher bars, and I'm looking for any subsequent bar, it doesn't need to be the next one, it could be the next 10 bars, but as long as no bar makes a higher than the bar that's being currently identified. So identified, this is the high bar. Now what I'm looking for is I'm looking for any subsequent lower bar that closes below here, right? Below the low of that bar, right? So we have prices moving up. Right, so that looks like the market's moving up. And then I've identified this is the high bar. And now I'm looking for any subsequent bar to close below this bar right here, right? So let's just assume this bar right here closes below. Any question on that? That's a pivot. Right here is a pivot. And I know I want to go slow, but I just want to make sure you guys understand this part because this is important. Understanding which one is the pivot. And again, it may be simple. And if you're not clear, just please let me know and I'll explain it again. All right, and then the same thing on the downside. Okay, so for example, let's just use real bars here. So see how price went from 41s and we're heading up, right? Higher bar, higher bar, higher bar, higher bar. So then right here, this bar right here is currently the highest bar in the sequence, right? No bar after that has made a higher high. And then what happens is it comes over, and then where do we get the low? So I'm going to just kind of put a line here. Which bar closes below? This bar right here, right? So this bar closes below. I don't care what this bar is. I'm just looking for any subsequent bar, you know, that's lower to close. That confirms a pivot. Come on. All right, I'm just going to delete that one and do that again. This bar right here closes below. Okay, so now I have a confirmed pivot, right here. And I'm just going to throw an arrow on the top to show you which is the pivot bar. So there's our pivot. Yeah, 64.75 is my high. The low of that bar is 57.25. So as long as no bar within this sequence goes higher, there's my pivot, right? And then the same thing to the downside. So now that we've identified a high pivot, now I can look for a low pivot. So where's my low pivot? This bar right here. And I'm just going to use arrows. It'll just make it easier. So this bar right here ends up being the lowest bar in the sequence. And then I'm looking for a bar to close above. And it ends up being this bar. This bar closes above. So now I have a pivot here and a pivot here. Okay, understanding the pivots. Any questions on that? Everybody good? Again, that's important to understand is what a pivot is before we go through structure, because you're going to be like, well, how the hell did you get that line to that line? All right, so now that we understand what a pivot is, now we've got a 53 high, right? I'm going to use these lines. I use these lines just to follow structure. Right? So I got a swing low at 30. I got a swing high at 53. Okay? We've identified that there's a high pivot at 53s here. We go down to 41s, and then structure moves up. Right? Well, let me do it the other way for you. We got 53s, it pulls back, and then we get progression, right? Progression moves up to 64, 64.75. So I'll draw a line from 41s to 64s. Now, as long as 41s hold, structures to the upside. Identify a pivot. Price pulls back. 50.75. And now I'm looking for a high, right? So there we go. There's our next structure level. So I'm going from 50s to 74.25. And I'm going to bring my line up. So now structure is, as long as 50.75s hold, we're in an uptrend. Okay. Now that we understand that piece of it, how we identify where the next pullback is going to be. So we go to 64.75s, right? We go to 64s. Where's the pullback going to be? Easy. Where's my last swing high? 53s, right? So I just draw a box over the pivot. Right? Let me move this out of the way. So let's say right edge, right? We'll use the right edge here. So if we go 64.75 and I want to know where the pullback is expected to be, 53s. I draw a box. So as price pulls back, look at there. 53s, there's a low of it. It came in midpoint. Fine. Okay. So now we go 46s. It pulled back. Where's my next high? 47s, right? So then structure moves up. I'm not going to use the snap level because I want to do boxes, right? So then let's use the right edge. Where would the next pullback be? Following structure, my next pullback should be the prior swing. So we went to 47s. Where should price pull back to? 46. I'm sorry, 64, right? Fucking 46. 64s. Okay. So let's take a look. Interesting. See how that works? So price pulled back. So this is how we can identify where I'm looking to buy. I'm looking to buy in here, into the zone. That's where I'm looking for a setup to be in here. Any questions on that so far? So then we're going to look for, I'm just going to move this one out of the way. So I'm going to look for my next high. Right, we get above. $96s. So I draw my line. So as long as this low in here holds, 61s, I just went to the wrong line, but that's fine. As long as 61 holds. Now here's where it gets a little tricky. Expecting a pullback to 74s. Ooh, all we got was a shallow pullback. They didn't actually pull back to the alternate pivot. So now that tells me that they're getting acceleration to the upside. But I'm going to keep this number in mind because some point we should, outside of a slope of hope and them just running the shit out of this thing, at some point we should get a pullback into this box. So I'm going to identify at this zone here because we went from 74s up to 96s. We never pulled back to 74 to test it. Right? We just jumped right over that thing, which can happen. Okay? So now we go to 96. The next swing high is 16s. Now it's structure up as long as 82 quarter holds. Okay? Where should my next pullback be? Right in there. So there should be an opportunity to trade in here. Bam. Price is going to respond from here. And then you're looking for progression. There's the next move, right, to 53s. 23s. Holy shit. Sorry, 23s. Right? So now structure's valid until as long as 94.50 holds. 25s made a swing high. Now this is where it gets to be where we start to see some ranging. When you only push, basically it's an SBTO where we can't now, we're not going to see SBTOs because of the volatility, but in normal action, this would be an SBTO because we barely broke above. Right? Because what should happen is you should break, pull back, and test where you broke from. You know, think of them like little ranges, right? So we go from 96s up to 16s. 16s comes back down to the 96 pivot. It's within that box, so that's okay. But now if you do 23s, where should if we make a new swing high, where should my pullback be? In here, right? I'm just going to get rid of this box a second. Right, 23s. Well, shit, we went to 25. You know, you want to see price break it so it has the ability to pull back into that zone, right? So I can identify, hey, we're going to probably range out a little just because of we went to 23s, 25s. Well, this pivot is already within this box. The high pivot's already in this box, so pulling back is not going to really help. Okay, follow so far? So now we come down. Ooh, we broke structure. We took out the 11s. Right? So we come down to 8s. 8s should bounce somewhere in here. Right? For structure down. So now minor structure is down until 1975. Right? So down. Alternate pivot there. 97.50. So now structure's down until 12.50. Right? Come on. So price is down until 12.50. Our structure's down. Right? Then they come up. Ooh, we took out structure to the upside. And then what do? They come back down. So now we've got a broadening. See how they got a little mini broadening pattern in here? We made a swing low, a swing high, a new swing low, right? So there's our mini broadening pattern. Now this, I don't want to get too much into this, but this sets up a deep pullback. This is just a deep pullback play. Okay, and then bam, there we went again. We took off. Right, so they trapped the shorts in here because they got a little zealous on it, be like, oh, hey, look, trending down. And actually, it just ended up being a deep pullback. Now, again, it gave us an opportunity to trade that, but we're trading a little bit of a broadening in here, just into the deep pullback. And then bam, there they go. Right, so now they push up. Structure is now up again. Right, up to 39s. Oops. So now we make a swing high to 39s. So structure is up until 26. And then they give a little deep pullback again. Again, this is where things get a little kind of odd here, but again, that's just the way it works, right? So if you understand structure and being able to follow it, you get a good feel for it. All right, let's see where the swing high is here. Okay, so we went to 47.25, so where should the pullback be? Right in this box. Well, they only came down to 42s. We didn't get to 39s. Right, so that when I start to see that where we're not pulling back into prior pivots, that's giving me information of a slope of hope. Right, they're running it and running it and running it and not really giving one. If we can't get in, we are always looking for the alternate pivot to buy. If they're not letting us in it, that means they're not letting the shorts out, right? Or opposite, downside. But in this case, because we're in an up move here, I'm seeing a little bit of a slope of hope. Right? So here, price should pull into here. That should be our next reaction area. So now what we're looking for is price comes into here. Now the trigger had already come in, but that's fine. We're looking for this area. In a perfect world, we're looking for this area to hold and respond back up and progress through the 73s. Okay. They came down, a little pivot in here. They came down to 57, up to 56. So they created a little minor range in here. So now we're going to range out, and we've got to watch for this area right in here to be a little sticky. This is going to be a little sticky area. And again, we've got a slope of hope that we're currently dealing with. At some point, it's got to pull back. We're going to get a deep pullback because it can only push it so long. So then once they run out of fuel, they've got to attract fuel, and they've got to pull it back a little deeper. They've got to attract selling just to the point that they don't attract too much that it starts to bring it down, right? They start to cause a downtrend. So the longs are trying to attract selling because it's zero sum. So you're looking for attract selling so they can refuel the tank to make new swing highs. Right, so what happens is basically when you think about it, we've gone from 55, 40s. That was our small little range in here, right? They break up, so now what should be tested is 55 area. And then 55s, you're looking for progression through 73s. Once we get progression through 73, right? Let's just use this information here. Then what you want to see is the 73 area hold. '73 holds, bam, that should make a new swing high. So like walking up the stairs. Make sense? Any questions on that? It becomes clear when you draw lines. Okay? Drawing the lines will really clear this up. And I know it's, it's like, holy shit, you really want me to do this? This can be tiring. Fuck yeah, it can be tiring. It's tiring for me to do it, day in and day out. But I've gotten to the point where, as I've taught you guys going over the last few years of drawing lines, I now can't trade without drawing lines. Not that I can't see structure without it. It's like shit. I got to draw my lines before I can trade. But I can see structure. I can see where the next target's going to be. I can tell you where this is going to go. Now, again, you can't see where it's going to go on a smaller time frame like a tick chart. So what I do is I take this same information and I apply it to my bigger time frame. And in my case, it's a 15-minute chart. So I use structure on a 15, and I can tell you guys where price should go. I've been talking about 2500s for a few days. We were way the fuck at the lows, and trust me, I know some of you were like, that ain't going to 25s. No fucking way that's going to 25s. And bam, yesterday we went to 25s. How do I know that? Understanding structure. Right? Now again, can you trade from 86s to 25s? Well, no. I mean, that's but if I've got any short trades, I have to kind of say, "Hey, look, I know that this is going to try to go to 25s. The down moves on a tick chart can be fairly aggressive and can be fine. We can trade them, but I might trade a little lighter. I don't want to get overzealous and be like, hey, I'm going to trade the next 9 slings to the downside when I know bigger picture's telling me, hey, you're going to run off a fucking cliff if you keep trading to the downside. This is going up. So that's what you use that information for. Okay, so as of right now, structurally, as long as 40s hold, structure's up. Now, we're getting stuck in a little bit of a range, and I said they're going to attract selling. We're going to get a little bit deeper of a pullback here. We're going to attract selling if they're going to continue to run this to the upside. At some point, after an aggressive move like we just had, it's got to refuel the tank. You run out of sellers. As you keep pushing and pushing and pushing, sellers are going to eventually be like, fuck it, I can't keep holding my shorts. So they have to create a point where they're going to attract the selling. Now, 55s, 65s, we're going to range out, right? They created these little pivot IDs in here. It's not structure, but they're pivot IDs that we can use, right? 57, 65s, we came down, they bounce, they fail to progress, it comes back down. So it's creating this little range in here. So now price is going to come up into this little box that I drew, because that's where these little pivot IDs are, and we're going to range out. This also sets up, and again, it's already happened, and I can't do anything about it here. But this sets up when the market gets back to normal, you're going to get a 2-point move on this because this is the fade trade. The ratchet shifts short. The bars are green on the bottom, so that's the institutional side. And then the yellow is the mom and pops, right? So it's going to create this little fade trade where they're going to give them the ability and create a deep pullback. It's just a quick move. You're looking for the bounce. Once this happens, the ratchet shifts, you look for quick bounce down. That's it, 2 points. That's all that move really gives you. And then that's where they go, and basically what it does is it in reality creates the deep pullback, and then they can run it back again. Okay, because they've attracted the selling in here, so we can play a quick scalp fade trade to play that. Now again, this doesn't look like much here, but we've gone 50 to 58s, down to down to 52s again, 53s. So, that was actually a 5-point move right there. It doesn't look like much. When the market gets back to normal, you'll be able to see how clear that trade is. It will create a deep pullback. And if the fade trade does not turn into, excuse me, a reversal, it'll turn into a trap trader, because the whole point of the fade trade is just into the deep pullback to now be able to play to the long side. Does that make sense? So you can see here the shorts right now, they're in a chokehold. We've got negative bars, jet fuel dots to the upside. So there's a fight in here. These shorts are like, oh shit, I just got caught, or I'm in the process of getting caught. So they're going to do what they can to fight their way out of this position. We'll know that they've given up and that they get trapped. Bam, once you take out structure, and in this case, because it's minor structure, 56 is here. So we've already reestablished minor structure back to the upside, and now we just need the shorts to puke it up. Again, I've gotten in a little advanced in here at this point, but does the basic structure piece work? So I can get an idea that, hey, things are going to be a problem if we don't pull back, or if we pull back too much. So if price starts to dip below the prior pivot, things are getting a little sloppy in here. Now I can identify that here when we come down to 57s, they go to 56 and come down to 55. 55 is fine, but now I'm like, ooh, during this process, they created a little range in here. Now I can look left and be like, oh, we got a slope of hope. They've run out of fuel at the 73s. They need to refill the tank. How are they going to do that? They're going to create a deep pullback to attract selling. But as long as 40s hold, we still get structure to the upside. Okay. Now, just so you guys know, we're going to get short trigger here, right? That's because this volatility is so crazy. It's giving this the ability to set up a short trade. Now, this is a short trade down into a long, trap trader long. And again, that's because of the volatility, right? We got freaking 9 points in a 3-second move. Understand? So I don't want you to be like, oh my God, this triggered a short, which is valid because we go from 65s down to 61s. That's just all because of the volatility. So it's going to trigger a short, but it's going to set up a trap trader to the upside. Again, this volatility is going to create, this confusion. That's why I don't like to trade it. Make sense? So we went from, 61s up to 69. So we got almost a 10-point move from here to here. All right. Now let's see what happened up here. Did we get some break lights, some volume spikes? We did over here at the 73. So there was a volume spike at 73s. So that 73 level as of this point is going to be an area we got to watch. We had a volume spike and a break light. So this is going to be an important level. So we did get a trap trader, but a trap trader right into a brick wall, a temporary brick wall, which is 73s. I might have went through that a little fast, But if you didn't understand, just let me know and I'll go through it one more time. It's very easy to do, but I want to make sure that you guys are getting this. Forget all the craziness I just talked about in here. Just the structure piece. I can explain all this other stuff once you understand structure, but any questions on that? Do you need me to go back? It's not a problem. I don't mind going back. So the key is to make sure that you guys are drawing lines. I know it's very basic. I know it's like, really? You want me to draw lines? Don't draw them. I don't care if you draw them or not. But I'm going to tell you, anybody here who has, followed me and understand where I've taught you structure, drawing the lines has made a huge difference. Has really cleared it up for you. Now you're going to make mistakes, right? And I've had this, I know Austin's great about it. John, the same thing, has asked questions. Austin has actually caught me, and a few others have said, hey, no, I don't have structure there. Take a look. And I've been wrong, right? So it's don't feel bad. Don't hesitate to challenge me either, right? Be like, hey, I've got structure here. And if mine's correct, I'll show you why yours is wrong. And, again, one of those things when you look at it, you'd be like, oh, yeah, yep, right. And it may be as simple as missing a pivot. That happens. That's kind of the biggest issue is I've missed a pivot somewhere. But that's why understanding the pivots is freaking really important. And then drawing the lines, again, I know is very first grade, but it makes a huge difference, man. Yeah, so what I'll do is I'll upload this into YouTube, just kind of I'll just name it, structure and pivots. It'll be just a basic, probably maybe a 10-15 minute video. So I'll put that up into the YouTube and then I'll email you guys the link tonight. It'll probably be tomorrow, maybe, because it takes time for it to render and get up into the system. So, um, but yeah, once it's up, I'll just name it, like structure or something like that. So for those that want to keep an eye on where we are on structure, if you want to start tracking the bigger picture, you don't have to go back and be like, oh my God, I've just done, I got to do 5 years worth of structure. For those that want to follow, I can tell you where we are on structure on the 15-minute as of today, right? And I use a Globex 15-minute, so not just a day session. So structure on the 15-minute currently is the high is 73, the low is 2/4. So you have a line at 2/4 and a line at 73. So structure is up until 2/4 on the bigger picture. Oops. So right now we're going to range out in here. Let me just put my line back here. Bear with me 1 second. Where the heck is that thing? Oh, there it is. All right, so remember, right here is an untested pivot from earlier. At some point, I wouldn't be surprised if they come back and test this. We also have another one here, this one here. Right, so we have two untested pivots. This one, crap, I hate these. TradeStation 10's a pain in the ass with, it picks up certain things. All right, so there's that one and that one. So unless they keep running this, we have two untested pivot areas. This one. Do I got the right one? Hang on. No, not this. So this is an untested pivot area, and this is an untested pivot area. We'll see if at some point they come down to here. Explanation on that part of it. So a broadening pattern. Come on. So we know what a trend up looks like, right? So a trend up looks like this. Right, there's a trend up. Trend up uses alternate pivots. Make a swing high, higher low, higher high, higher low. The higher low should come into the previous higher low or higher high right here, right? That's how it works. A broadening. So in this case here, what you're doing is you look to buy those pullbacks, right? I'm looking to buy the pullbacks. However, here's where this starts to take your money, right? So you get a broadening pattern, price comes up, makes a swing high, oop, just made a swing low. Holy shit, I just made a swing high. What the hell just happened? I just made a swing low, right? So what ends up happening is a lot of traders will understand that, hey, look, I should be buying the pullback. So they buy the pullback. They look to buy it here. Not wrong, right? Because that's what you should be doing is you should be buying the pullback. But bam, or in this case here, it'd be here, right? Buying the pullback, and then bam, you got stopped out, right? So like, okay, maybe we just got, maybe it's just a reversal. So now here's the alternate pivot. We're in a down move. So then they go to short here. And then price does this. Bam, you just got stopped out again. Like, what the fuck's going on? Okay, fine. I'll buy it again. Right? So you go look to buy the alternate pivot here. And then price does this again. How's that? Right? But like, holy shit, what the fuck just happened? Right? That's a broadening pattern. Those things are awful. Now, there are ways to trade them, very advanced. We've got a couple different things that we can do. So it gets crazy, right? So there's a broadening pattern. How the hell are you trading that shit? All right. Any questions? Does that make sense? Now, a broadening pattern doesn't have to typically go straight up, straight down, straight up, straight down. It's, in this case here, right, which is what we kind of dealt with a little bit yesterday, and when you look at a bigger picture, you can see it. So we took out 40s. This thing could range around. It could come up, come down, come up, come down, come up, come down. As long as it doesn't take out 35, 75, and it takes out 73 before that, that's a broadening pattern. That is this ugly sucker right here. Now, what's the conservative way to trade a broadening pattern? Right? The best way to trade a broadening pattern, or the more conservative way, is, unfortunately, you're going to have to sit through some swings, but if you go back and look at them, you're going to be like, "Ooh, I saved my ass from doing that." So let's just say on a down move, right? How am I going to trade a broadening pattern? So, if you price comes up, comes down, comes up, ooh, I'm buying it, and bam, you get stopped out. All right, fine. It comes up, I'm going to short it. Bam, it comes up, you just got stopped out. Price comes up, you look to buy it, and bam, you got stopped out. Right? So how am I going to trade this pattern? How am I going to successfully get back to normal? The easiest and most conservative way, and you're going to have to be very patient with this, is you're going to have to wait for price to come up. I don't care how high or where the fuck it goes, as long as it doesn't take out the previous high, right? Price comes up, we make it low, a lower high, and a lower low. Now you can short, successfully short in most cases, right here. And this would be a valid, good play, right? Here's your conservative opportunity to trade it right here on this move. And obviously flip that around for the upside. Does that make sense? So that's the conservative way. Now, you're going to have to, if you don't draw your lines, one, you're not seeing this, right? And then the other part of it is you've got to be very patient for this to happen. You've got to be very patient. You may wait for swing after swing after swing. You have to wait for this to happen. Otherwise, you're going to get caught in this. Now, there are other ways to do it, but the conservative side is this. Now, here's another pattern that I've seen over the last couple of years that's really freaking frustrated me. And this really screws up this whole pattern. You come down, you make a lower high and a lower low, and you go to short this, and then bam, they do this. That's the hybrid broadening. They will catch so many traders on this, and unfortunately, there is no way to avoid that. That is just one of those unfortunate things that happens. I hate it. It's a shit freaking pattern, but there's nothing I can do about it. Right? Those are the ones that I'll get caught in every single time. It's like, I'm shorting it. We've come up, we've come back down. So now we have a downtrend. Right? It's like, okay, they finally got back to normal. I've got a downtrend. Right? From the swing high to swing low, there's my new downtrend. Right? There it is. So now I'm going to short right here. And that 95% of the time is going to be a very successful trade, and you'll do very well with it. But there's that one case that they, boop, nope, see you later. It's a son of a bitch. So I'm always cautious on it, but I'm going to play it, because, hey, that's the deal. I'm shorting right there every single time, and then down it goes. We're going to continue the downtrend. And then obviously, again, flip it to the upside. We're good to go. Understand? Any questions on that? So apply that to real charts here. If we look, so our first indication is we've had a higher low, a swing high, a swing low, a higher high, a higher low, a higher high. So we're trending. And then what they did is they ranged it out in here, and then bam. Now again, this is also a start of a trend reversal by making a swing low. We go from a swing high to swing low. So yeah, that's your initial, hey, look, there's our first opportunity. So what you could do is turn around, like I said, it's going to bounce up into here and come back down. But if it fails to progress, it's giving me an indication of a potential shit, this could broaden. They could come all the way up here and take out the swing high, and that's a broadening pattern. So yes, we go from a swing high to a swing low is how they go to a reversal. And usually they'll do it by going swing high, higher low, fail to progress, and then it'll come down. That sets up the reversal. Right now we got a lot of volatility in here, so this shit gets real crazy, but that'll usually, this portion here where it fails to progress is my first indication of a reversal or range, right? Same thing. But when they come down and take out the swing low, okay, fine, everything's there, everything's valid, it's a new short. And then they come up here, this is a valid short up here, and then they fail to progress. Very rarely does it rip right up. Outside of news, you won't just see it rip right up and screw you. It'll at least set up the opportunity. Majority of the time, it'll give us the ability to take profits, if not give us our initial target. But the key is progression. If they fail to progress through 35s, like they did, they only came down to 37s, and now they're creating this little uptrend. Like I said, it doesn't usually go straight up, straight down. If they don't take out 35s and they take out 73s, we've got a broadening in play. Now, on a day like today, I'm not a big surprise of that because we have a slope of hope. It's turned into a slope of hope with a deep pullback. No problem. Right? So they could very well come up here and take out 73s and restart the trend again. But it's created a broadening pattern because we went from a swing low to a swing high to a new swing low at 35 and then come up and take out 73s. You can't see this ugly pattern without drawing your lines. Now I use the yellow lines to identify where my structure is. Okay. Now, nobody's asked about the blue line yet, right? What's the blue line for? The blue line identifies two pivots back. So here, 40s was my first pivot. 25s is my second pivot back. What I use this one for is usually this line will hold for a deep pullback. It kind of gives me, all right, look, as long as 25 holds, that's telling me that for now this is a deep pullback and they could bring this up. So that's what I use the light blue line for here, is just to identify a second pivot back. If you take out two pivots, you take out 40s and you take out 25s, then I've got a little more confidence on okay, this is a trend reversal. We're going to start heading down now. Now, they're normally not this far apart. So you guys know we're not, 10 to 20 points apart on those, but that's just due to the volatility. So typically when you take out two pivots back, now you've got confidence on a reversal. Not 100%, but it's a pretty good indication. So holding the second pivot back area, my second pivot low, tells me, look, if we don't take that out, this may just be a deep pullback for a continued move to the upside. And you'll see that on a range days, it's a little tougher. But on slope of hope days, you can usually use that as a pretty good gauge. So we haven't taken out 25s. So this for now is just a deep pullback. But 73s are going to be a sticking point. 73s are going to be a little tough because when we came up to 73s the first time, over here, we had brake lights and a pretty good volume spike, right? So that identifies 73s. These are all just little tools, that we like to use. So you see the volume spike, an orange brake light, 73. So until they take it out, this level you have to be cautious of on any moves to the upside. You've got to be aware, I've got a brick wall here until we get through it. But once we get through it, you should see volume spikes. I don't necessarily care if I see a brake light, but if we get through it, you'll see volume spikes. And then what will happen is, using structure, you come back and 73 should hold on any pullback for your next opportunity to play that trend. Make sense?